The cons of investing in REITs. 1. Market risk and volatility. Although REITs offer a more liquid and accessible way to invest in real estate, they are still subject to market risk and can experience volatility, especially in the short term. The stock market often impacts REIT prices, and the value of your shares may fluctuate based on economic factors like interest rates, inflation, or overall market conditions. For example, if interest rates rise, the cost of borrowing for real estate companies increases, which can lead to lower profits for REITs. Similarly, during times of economic downturns or market corrections, REITs can be affected just like any other stock, leading to drops in share prices. 2. Dividend taxes. While REITs must distribute most of their income to shareholders, these dividends are often taxed at a higher rate than qualified dividends from regular stocks. In many countries, the dividends from REITs are taxed as ordinary income rather than at the lower long-term capital gains tax rate. This means that, depending on your tax bracket, you could face a higher tax bill on the income you receive from REITs. While this isn't always a deal breaker, it's important to consider how these taxes will affect your overall returns. 3. Limited capital appreciation. While REITs provide an excellent way to earn income through dividends, they are often less focused on capital appreciation than traditional real estate investments. The value of your REIT shares may not increase significantly over time, especially if the real estate market is stagnant or declining. For example, REITs that primarily own office buildings or retail properties may struggle to see much price growth if those sectors are underperforming. While you can still earn a good income from the dividends, your potential for capital gains might be limited compared to other types of investments. 4. Interest rate sensitivity. REITs tend to be sensitive to changes in interest rates. When interest rates rise, borrowing costs increase for real estate companies, which can hurt their profitability. Higher rates may also make real estate less attractive compared to other investment options, like bonds. This means that in a rising interest rate environment, REITs could face challenges in terms of both profitability and market performance. This makes REITs a bit riskier during times when the Federal Reserve or other central banks are raising interest rates. 5. Sector-specific risks. Each type of REIT has its own unique risks. For example, retail REITs face the ongoing threat of e-commerce and changing consumer shopping behaviors, which can lead to declining demand for traditional retail space. On the other hand, office REITs might struggle if companies continue to embrace remote work or reduce their office space needs. Similarly, healthcare REITs may be impacted by changes in healthcare policies or shifts in demographic trends. It's important to carefully consider the specific sector a REIT operates in and understand the risks associated with that sector. 6. Overexposure to real estate. REITs are entirely focused on real estate, which means if the real estate market takes a hit, your entire investment could be at risk. While diversification within the REIT sector can help, it's still tied to the performance of the broader real estate market. If the market experiences a downturn, like during the housing crisis of 2008, your REIT investment could suffer, especially if it is concentrated in a specific type of property or region. Is investing in REITs right for you? When deciding whether REITs are the right investment for you, it's important to weigh the pros and cons. If you're looking for a way to earn regular income, diversify your portfolio, and gain exposure to real estate without the hassles of owning property, then REITs could be an excellent choice. However, if you're concerned about market volatility, taxes, or sector-specific risks, you'll need to carefully consider whether REITs fit within your overall investment strategy. By understanding the advantages and challenges associated with REITs, you can make a more informed decision about whether to invest in them. As with any investment, it's a good idea to consult with a financial advisor to ensure that your investment choices align with your financial goals and risk tolerance.